Welcome, everybody. It is Friday, as always, and that means that it's time to get things started with our Friday Rebel Income Insights. Looking forward to this session, as always, and happy to see all of you here. I know that in the first couple of minutes, a lot of you will kind of tune out for a minute while I do a little bit of housekeeping. I'm going to ask you not to do that because before we get started, I do have some news that I need to share with all of you that are using Discord. And so, excuse me. I've been over the last few months. I've been using both Substack and Discord to share my not only my daily reports and insight, but also to send you trade alerts and to make sure that you have the link information for this live stream. I'm going to continue to do that, but in the next probably this weekend, if you are on Discord, you're going to start seeing an email from me through Substack inviting you to connect with me there. I'm going to over time migrate all of my content to Substack exclusively. I'm not going to stop posting on Discord for the time being. I'm going to continue to manage both of them together to try to allow some time for that transition to happen. But I do want to encourage you to go ahead and watch for that email and join me on Substack. That's going to be a format. If those of you that have been part of the Investive trading group, that's a format that you're going to be a little bit more familiar with. It's a little bit more similar to the website, to the ITG website that has been taken down. And so I think it's going to work a little bit better than what we've been doing with Discord. Discord was a really nice intermediate kind of a transitional platform to use to make sure that I could continue to support all of you. And now that I have Substack set up and running the way that it needs, I'm going to go ahead and migrate everybody over there. Your access levels will not change. If you are a member of the ITG group, that also means that the access that you originally paid for will still be enforced. This is not going to require new subscriptions or anything like that. You'll still be set up with the same access. It's just going to be switching over to that platform. If you have any questions about that, feel free to put them in the chat. You can always email me, of course, whatever you need. But I do think that this is going to be something that's going to be easier for you and more a little bit more comfortable, maybe than what Discord has been, and will give you a similar kind of a platform to interact with me and with my content. So, okay. With that said, let's go ahead and dive straight in. It is Expiration Friday, as always. Barry, I'm not familiar with Substack. Let me just thank you. I'm just going to really quickly just show you my Substack page. If you recall the ITG website, it kind of operated on the same basis. Every time I post, yes, Gib, nothing is going to change with the live stream. I'm just going to be, and here, let me open up this post. This is the same post that I put up on Discord, in effect, and the link for YouTube does not change. The live stream will still run through YouTube, not through Substack, so that will be the same. But every time I post new content, whether it's a live stream, a trading alert, or simply a daily analysis, you'll see that new post in the central area. Over here on the left-hand side will be the recent posts that came before the newest one, and then over here on the right-hand side are the ones that the Substack algorithm has identified as being the most popular. But you'll have access to all of my content through this main page. You can Thank you, Carl. He says it's better than Discord, and the flow is awkward at first, but take time to learn. I think that it will be a little bit faster than maybe what Discord was. This is linked directly to my YouTube channel, and then you've got access to everything else here. Here's track record, a little bit more about Rebel Income, et cetera, et cetera, et cetera. So this is going to be a little bit. This is going to be quite a bit more straightforward. If you have questions, you want to interact with me, you'll always be able to hit chat and go and send me a message directly. Yeah, Carl, it's all about being familiar with it. So you'll get an email with an invitation to me to join me on Substack, and as I mentioned, your access is going to be the same. You're going to have access to everything that I put up here. So, and if you're already on Substack and you're already using it, then nothing is going to change. So I'm simply going to move everybody over, and we're all going to live in the same place. Okay. Thank you for letting me take a couple of minutes to, yeah, Barry. Yeah, don't try to do anything yet. He said I tried to log into it. It gives me payment options. Wait for the email. I'm going to be sending out an email to everybody that is on Discord this weekend with an invitation to join me on Substack. So wait for that email before you do. If you wait for the email, you won't have to worry about payment options. I'm gonna take care of your access before I send you that email. I just have not done that yet. So I'm just trying to give you a heads up so that you'll be ready and not surprised when you see those emails. So thank you. All right. And as always, if there are questions in the interim that come up, feel free to message me. You can either, of course, reach me through the chat. I still, as I mentioned, I'm still going to be managing my Discord server for the time being, and I don't have a time frame on when that's going to be cut off. I'm going to just try to play that a little bit by ear, and I'm going to manage them both. And that means that if you prefer to reach out to me on Discord through the open discussion channel or directly there, then you'll be able to as well. One of the things that has prompted this change has been one of the things I talked about in a previous live stream, which is seeing that my profile is being used by somebody else. So Traders Pro is on Substack as well as Discord. I don't know where Jesse sits in terms of trying to move everybody to that, so I'll have to leave that to him to take care of. But I'm going to start that process for my Substack this weekend. Okay, thank you. I appreciate you letting me share that with you. Let's go ahead and dive straight in. It's the last Friday of May, and that doesn't mean necessarily anything big, except that it's an expiration Friday. So that does mean that there are some options that are expiring today, and I have a couple of open trades we'll be talking about. Really quickly, though, I just want to talk a little bit about the tone of the market right now. We had some recent news that tariffs on China might be coming back, and so that's putting the market a little bit on edge again. We're seeing a pretty consistent top up here, just a little bit below 6,000, and this is below the previous high from earlier in the year, which is about 6,100. Does that mean that that we're going to see another drop back down here? That's really hard to say for sure. But for now, one of the things that I'm really interested in from a technical standpoint, there's a lot obviously that needs to be played out and settled on the geopolitical front, on the macroeconomic front as well. But I am interested in my trend lines. And here's the 200-day moving average, providing a nice little gradual slope here that provided some really strong support for the last pivot low in the market. That actually came on Monday and facilitated the latest push up here. We'll see if that continues to offer support in the same way. Here's the 20-day moving average, and closest thing I've got to this orange line is a yellow one. So sorry, I know that's hard to see, but we can see that moving pretty sharply up with the rally that we've seen since April. And then here is the 50-day moving average, a little bit below, around 56. So with the market down up here around 5,900, to me, all of this means that I would not be surprised if bearish conditions come back into play as trade tensions, if they continue to escalate. I don't know that we'll see a drop to the extent that we saw here at the end of March and beginning of April, but I wouldn't be surprised to possibly see some kind of a drop down into this $5,600 range. And given the overall slope of the upward trend that we have had since mid-April, I wouldn't even consider this to be a bad thing. If we saw some stabilization in here around, I'm going to switch to purple, multicolors. If we start to see some stabilization here between 56 and 5,700, I would take that as a positive sign and probably a good indication that we may see some stabilization and possibly find what could be a situation where the market is looking for a reason to start pushing back higher again. Again, that's a mostly bullish outlook based just on the technicals. Geopolitics, as we know, could change all of that. Another positive bit of information that I noticed in the news was some of the economic data that is coming out showing that some of the economic measures like PCI, which is an important measure of price, indicates that some things are continuing to soften, and that could increase the possibility and open up the door for a little bit more for the Fed to possibly lower interest rates. It would be interesting to see how that counters whatever bearish momentum we may be seeing from trade. If that would be enough to totally offset it, or is it simply just force the market to kind of stabilize or consolidate? I'm not really sure. Obviously, I don't have that kind of a that kind of a crystal ball, but those are some of the things that are kind of dominating attention right now in the market. So we'll see how this plays out. In the meantime, it shouldn't be too surprising. My overall tone is not going to change too much as far as what I'm doing in the market and the kind of trades that I'm paying attention to. So I'm going to try to be really selective, very conservative about the things that I am not only the trades I'm placing, but the information that I'm providing you and the viewpoint of the stocks that I'm highlighting. I'm really leaning a lot more into the idea of high value equity bond type stocks. So I'm looking for really stable business and cash flows, looking for really healthy dividends, very sustainable. And when I say healthy, I don't mean high yield. I'm talking about high quality dividends, and really solid balance sheets. So those are kind of the things that are kind of driving my analysis. And it's interesting that along the way, some of the stocks that I have been paying a lot of attention to and used in some previous trades to nice effect, by the way, right now they're starting to fall by the wayside because they aren't really meeting this little bit higher criteria that I'm giving for equity bonds. They're still paying dividends. They're still good companies. Don't get me wrong, but there's some other, they're starting to show some cracks in some cases that are having to they're telling me to put them aside for the time being. And so I think that's a net positive. It's making me more selective. And that's one of the ways to try to adjust to different market conditions, right? If you think that things are becoming a little bit more bearish, or if you think that risk is escalating, and you want to try to think about how to adjust in the market, for me, one of the things that's smart about that isn't necessarily to change everything that you're doing, but to think about what you can do to tighten it up. And as always, I'm going to, beat the position sizing drum again, make sure that any new positions that you take on are very conservative, that the sizes of your positions continue to be conservative. Okay. Let's turn the page. Let's talk about some of the trades that are on deck right now. As I mentioned, there's really just two positions on my side that are set for expiry. Then they have a couple of others that are pending in the weeks ahead. We'll take a look at those, and I expect that we'll have some time afterwards to talk about some things that you may be interested in. Maybe Barry can give us an update on NVDL. And so any of the other stocks that you may be interested in, we can go ahead and take a look at those as well. Okay, let's start with Pfizer. This is a stock in full transparency. I own shares of this stock at a much higher price. This put sale at using the 22.50 strike price was an opportunity to, for my part, if I am assigned to lower my overall cost, my average cost basis, and still bring in about 2% on the basis of the 22.50 strike price. This was about a 2-week trade. Let's go ahead and check in on Pfizer and see where we sit right now. I'm going to zoom this in a little bit. Let's get a little bit more clarity between our candlesticks. There we go. Okay. Pfizer hit a low here around 22, beginning of May. This was right after I placed the trade, by the way. And it's rallied since then, now sitting about 23.33. That means that with 22.50 as my strike price right here, that means that it looks like this position is going to expire worthless, and that's okay. That's not a bad result by any stretch. Means the 45 cents I brought in, if I just follow my normal method, which is to let the option expire and wait for next week an opportunity to deploy my capital into a new trade, and that's okay. This is a very conservative position for me in terms of the position size. This is more conservative than normal. That's primarily driven by the fact that it's not a new position. I already hold shares in Pfizer, and even trying to maintain proportionality, I was wanting to keep this, still trying to pay very, very, very close attention to my position sizing principles. So the reserve amount on this, the capital reserve amount for this trade, is $2,250. Doesn't sound like a lot, but I'll have that back and be able to redeploy it. Let's take a look though and consider what to do next. Because with the stock above my strike price, it does open up the possibility here. Let's open this up, go to contract details. Really interesting. On this one, we've got an asking price of 2 cents. Remember, I sold this and brought in 45 cents, which means if I were to buy this back right now, be hanging on to 43 cents per share. If I put in a buy to close on this, given the level of volume and the amount of open interest, this would fill almost immediately. That's interesting because it opens up the opportunity to consider whether or not to continue to work with Pfizer, roll forward, maybe up a little bit with the stock's momentum. Here's about 1% for the next 7 days. That's interesting. If 1% in a week is a problem, maybe let's go have an offline discussion. So on an annualized basis, that's pretty fantastic. Here's just about 1.5% for 2 weeks. Again, really nice. Little bit less than 1 week because you are selling more time, but still pretty attractive. $0.42 at 3 weeks. So if you like Pfizer, you wanted to try to take a more active approach with this, the advantage of buying it back means, of course, that your capital comes back to you, is available to be redeployed pretty much as soon as the original put sale is bought back. So if you do that before the market closes today, you get to redeploy that capital almost immediately. By letting it expire, which is my normal method, I have to wait to redeploy that capital until the trade settles, which is probably Monday or Tuesday, more likely Tuesday. And so I'm not able to place as many trades, not able to do it as frequently. Whatever your preference is here, there's not a right or wrong answer to this, although I know that some members of our group have taken me to task for not buying these back and rolling them a little bit more actively. Here's a full month, a little over 2%. Which is, again, these are really interesting numbers. Lots of different possibilities. If any of you have also been working with Pfizer, you want to share your numbers with me, see how you're doing. If you have been applying a different method, maybe you've been managing your trades a little bit more actively than I have. I would like to see that as well and get your perspective. Maybe you didn't wait until today to try to look at this, and you ought to already taken advantage of some opportunities to roll it and keep your income generating machine going. Excuse me. But that's Pfizer. I'm going to let this go ahead and let this expire. I'm not going to change my method. I'm just kind of outlining some of the different possibilities and opportunities that may lie with this one. The other trade that is on deck for expiry today is a covered call on FCX. I sold the 40.50 strike price. I was assigned shares of FCX at 40 here in the middle part of April, and had watched the stock drop all the way down to about $33 when I was assigned. So it had faded back quite a bit. Took that assignment, and it rallied enough to give me this covered call. Let's see where it sits now. Barry had an opportunity for a decent FCX call this week. Brought in 75 cents, $42 strike for 613. Nice. And you're assigned at 41, so a little bit higher price, but second call sale since holding. Nice. And I've only had the one. So if you've done two, you're ahead of the game. Thank you, Barry. Barry's already beating me. I like it. I brought in 77 cents on this covered call, and just because I've been a little bit more passive is the right word, I think. Not as not as opportunistic. I'm okay with the result I've got, to be clear, but I love it when people find ways to apply the method in their own way, and you get to do better than I do. I think that's pretty cool. Carl, slowly get back in the cell. That's exactly right. And Barry, no problem. I just assumed if previous live streams are any indication, we're going to be checking in on NVDL, right? Let's just call it what it is, shall we? Okay. So here we are with Freeport McMoran. It is down a little bit, faded back even from the open. And so this does mean that my call option is going to expire worthless unless we start to see a really positive boost in momentum on this one. Shift over to FCX. Hit resistance right here around 40, and it's fading back. Now, I'm not really too concerned about the fact that it's still about $2 below the strike price that I sold. It's been using the 20-day moving average as pretty solid support lately. And what it's doing right now is it's testing that support. So we'll see if that continues to hold. It may not. Let's just be fair. But that's okay. It had dropped all the way down here to 28 before I was assigned. So we'll see if this see what happens after this. But I expect this option is going to expire worthless. That means I'm going to hang on to the capital that I've got, hang on to my shares. And here's the $40 call. If I wanted to, I could buy this back. Again, just like with Pfizer, I would easily be able to get 2 cents, very possibly even 1. I could probably put in a buy to close at 1 on this, and I'll bet I would get it. It looks like if you wanted to do that and look for another covered call, if you're willing to go out another month, this is interesting. $1.05 at 40. This is the same strike price that I sold for June 27th. Here's 73 at 41, which is what Barry in the neighborhood of what Barry brought in at 75, but with an earlier strike or earlier expiration. This is where Barry's trade fell, and this is still interesting. At 40, you sold the 41, Barry, so you've got a little bit different story there. A little less than 1. It's basically faded back. This contract faded back about 50% from where you were able to sell it. That's nice. Oh, you sold the 42. You're right. You said that in your explanation. I overlooked it. My apologies. There we go. It's faded back even further from that point. So we would need to see the stock really start to pick up bullish momentum again here for this price to start increasing. But good heavens, just in less than a week. You brought in 75 cents and it's already worth about a third of that amount. Not saying one thing or another. That's just interesting. There's also nothing wrong with waiting to see if it can stabilize and pick up some new bullish momentum. So that's Freeport. Along with Barrick Gold, this is a stock that I kind of like. I like the ability. I like having the opportunity to expand my participation in, exposure to, whatever you want, in the metals and mining industry a little bit, working with good companies in this industry as kind of a proxy for the precious metals that they work with. FCX primarily copper, gold, silver, molybdenum. I'm sorry for those of you who know how to pronounce that. I know I just slaughtered it. But being able to work with these is a nice way to maybe to hedge against some of the larger risks, especially some of the geopolitical risks that are out there. And so these are good companies, solid balance sheets, really interesting value propositions. Doesn't mean the stocks can't be volatile, but all other things being equal, these FCX, Barrick Gold, maybe a couple others in this industry, kind of fit nicely into this equity bond niche that I'm starting to that I've really begun to gravitate to. All right. So that's FCX. Let's see. Last week I was able to sell my put sale was on Schlumberger energy stock at the $34 strike price, and brought in about 88 cents, so a little over almost 2.6% for this trade. That's another nice initial result for about a 2-week trade. Is a week from expiration, so this one might be interesting to consider, just in terms of the opportunity to manage actively versus passively, with a week to go before expiration. So let's see where we sit. Again, I sold the $34 strike here, bringing in 88 cents with a week to go. Stock is fading back. Fell below 34 yesterday. Well, Wednesday really is when it fell below, and it's just stayed below. And now it's just starting to approach 33. So we'll see if it can hold support here at this last pivot low. We should have 1, 2 pivot lows. Whether or not it can form a third here, we'll have to wait and see. Day moving average is flattening, which is interesting. That trend line doesn't flatten very often. It goes up, it goes down, but it doesn't. It rarely flattens. So this is interesting. Carl got into this one late. Okay, $1.32. Also the $34 strike, Carl. So this one, again, the opportunity to manage this is a little bit different, just because it is in the money for where I started, selling the $34 strike. Gotcha. That also explains why you got a little bit more, right? This is in the money. Here's the $34 strike. $1.39 and $1.62 on the ask. So I'd have to eat a loss of not quite 50 cents. And this one, I'm not going to try to do the math in my head, but here I'm going to call it $1.62, even though it says $1.61 right now. And we're going to subtract that from 88, which is what I brought in. And so, again, this is why I don't do math in my head. I have to absorb. If I wanted to buy this back and try to avoid the potential of an assignment on this at 34, then I would have to eat a loss on this of 74 cents. Now, again, this is a conservative position for me. I only sold one contract. So this is 100 shares. Shot in the dark trade, felt comfortable with it. Carl, here's the nice thing about this. I'm not opposed to selling in the money if, number one, you're accepting the reality that you are in the money and the possibility of being assigned is higher. Number two, part of the reason that you're doing that is the opportunity to capture a larger premium up front. That's fair. And maybe number three, you're doing what maybe some of our active roller friends like to do, which is to try to work with momentum a little bit. If momentum on Schlumberger turns, that was going to be caveat number 4. I'll get to that one. If momentum turns on this one and starts to rally back up above 34, then there's going to be an opportunity to manage this trade very quickly and capture probably 50% or more of the $1.32 that Carl brought in. That's what the purpose, if part of the purpose was. If another part of this was simply that you're comfortable with the idea of owning Schlumberger at 34, which I am. I'm underwater on this. I'm comfortable with the idea of owning the stock at 34, and therefore being assigned doesn't really worry me too much. Getting more premium is getting more premium, right? And that's okay. This one does have an ex-dividend date coming up on Wednesday. All things being equal, I don't think I'm going to qualify for this because the trade expires on Friday. This isn't far enough yet to really trigger an assignment for me. In all likelihood, I could be assigned, but I don't think it's likely before then, unless bearish momentum picks up a little bit more. Starting to stabilize. It looks like this support might hold just in the time that we've been talking. So it's interesting. One of the reasons that that I don't trade these positions more actively, I've talked about all of the reasons that you might consider doing it, right? Why don't I do this more actively? Why do I take this more passive approach? Well, not only is it because it's easier for me to manage within the context of everything else that I have to do in terms of managing Rebel income, all of the other responsibilities and things that are regular part of my life, but also to be quite honest, in the case of the capital that I'm using for Schlumberger, if I were to manage this more actively, I have to I'm not sure necessarily that I want to do something else with Schlumberger. I might want to do something else. I don't know yet. It's easier to be honest. It's simply less stressful for me not to have to worry about that too much. And so one of the requirements of taking this more active approach is to have an idea of what you're going to do with the capital that you're using to reserve this trade. What are you going to do if you buy the contract back? What are you going to do next with that money? If I am trying to avoid the assignment, that's part of the reason that I'm going to buy it back now and absorb that loss. Well, the mindset, the thought process I need to be going through is what is next? Am I going to sit on my hands for a week? Am I going to go ahead and continue to work with Schlumberger? Maybe recenter at a little bit lower price, a little bit more time. I don't know. Maybe I go and I find a different stock. As I mentioned, I'm okay. I don't mind Schlumberger at 34, even though it's below that right now. So without a clear game plan in mind, it makes more sense to me to stick with what I'm doing. So, Carl, shoot and forget stock during trade managed results. Don't forget about it, but take your shot, right? Yeah, right. Don't worry about, do I need to try to manage this more actively? Be willing to accept the result. And part of the reason I can't accept the result is because I am purposely trying to manage these trades very conservatively. So I can afford to simply set it, not forget it because I'm going to pay attention to these, but set it and let the result be the result. Yeah. So, all right. So that's Schlumberger. This week I introduced a new stock into our trading rotation. New stock, not necessarily a new company, at least for most of us, I'm willing to bet. Stanley Black & Decker. If you're any kind of a tinkerer, handyman, person that just likes to work around your house, then you probably got some of this company's products. Sold the 62.50 strike price on Wednesday, brought in not quite $2. I was able to manage to get into this trade just about the level that I had originally planned on this, even though the stock was being a little bit volatile on Tuesday and Wednesday. My 62.50 is down here, so it's actually a little bit of a distance away from the stock's current price. This is a 3-week trade. So still about 2 more Fridays after this one before this expires. 3. 3 more Fridays before this expires. But it's this was one of the reasons I like this trade is because it was a very conservative setup. Selling 62.50 with the stock at around 65 gives this one quite a bit of room to work with. And that was another reason that I really liked this setup. Even though the stock was above 66 as of yesterday's close, it's fading back again. This is a lot of people in our group don't like working with stocks that don't offer weekly options, and Stanley Black & Decker only does monthlies. They also don't have they have pretty wide spreads between strike prices at 65, 62.50. Sometimes that works for you, and sometimes it works against you. In this case, it worked for me pretty nicely actually, because I was able to. This is a little bit above the strike, the premium I brought in on Wednesday, but at 62.50, this $2.50 gap between strike prices means that I was able to set this a little bit more conservatively. If there were $1 increments instead of $2.50, I might have been more likely to set a strike price around maybe 64, possibly 63. And so that makes the 62.50 a little bit more conservative, which, again, it doesn't always work out in the same way. Sometimes having this distance between these strike prices would make the 62.50 premium not attractive enough to use. Just depends on how much activity there is going on in these contracts and how much activity there is. And this doesn't look like a lot of open interest, but it's enough. So this is a useful start for Stanley Black & Decker. We'll see where we go. Okay. with that said, those are all the positions, and Barry has already set the stage for the next part of our discussion. Let's check in on NVDL. So Barry was assigned on Friday at $50. Well, I'm really sorry for that. One-day trade, he brought in 75 cents, exactly 1.5% for a one-day trade. Then on Monday, sold a $55 strike price call. Monday was a holiday, so Tuesday, you're right. Thank you. Appreciate the clarification. Tuesday, sold a $55 call, bringing in $2.09. Wow. That expires today. Yeah, we saw a peak up here at 58, and it's been fading since. And we're going to run the numbers here. All right. Put sale. $50 strike. Brought in 75 cents. And that was a credit, right? So that's nice. Okay. And the covered call, $55. Expiry on 5/30, not 40. And 209 premium on that one, because implied volatility on this one was pretty elevated, right? Total premiums. Just going to call this total income. Would be $3. $3.66. Oops. I'm just going to double check my math here. $2.84. Yeah. Sorry about that. I was making that look really good. All right, so the total yield on this one, let's divide that by 50, 5.6%. Boy, that's not disappointing, is it? 5.68%. And this is, if I'm not mistaken, this is for about 8 days. Right? So that's again in the category of nice results. This is really, really nice. So Barry gets another one. So nicely done. This is one that I know you've been able to use to nice effect. If you're not familiar with this one, this is basically an ETF that tracks NVIDIA. It is set at half the price of NVIDIA, but basically mirrors its movements. The flip side is that if you're working with NVDL rather than NVDA, dividend distributions, if you are assigned, are not a part of those trades. And for NVIDIA, that may not really matter because their dividend is really very, very negligible. 1 penny. That's just nothing to be really all that impressed by. You don't buy NVDA for the dividend, at least not yet. Barry, not assigned for long. Usually, I don't think I've ever had to hold it through a quarter yet. Yeah. And in the meantime, what Barry is able to do with this iteration of the put selling method that we're talking about, you're paying yourself regular dividends, right? Starting with the put sale and then every single one of these covered calls. Today's covered call looks like, well, who knows? Just in the little bit of time we've been talking, it's pushed back up above 54. So it could get above 55 before the close of business today. If it does that, then it's going to call you out of your shares and give you another $5 of capital gains on top of the $2.84 you brought in. So I don't know if that's not the worst result, right? After being assigned at 50. So either way, sounds like a nice weekend. Yeah, and if not, you have a few strike prices you can work with and continue to sell cover call. You'll still be sitting in a nice profitable position. So you're in a good spot with this one, and this trend. This is one of the things that you can do, and what some of the people that like to work with put selling do is they use this as just a different kind of way to trade momentum. If you're a more active put seller where you're managing trades more actively, it's just another way to try to take advantage of the swings of price from high to low. And right now, NVDA is clearly on an upswing. Some of this has to do certainly with this fade in the last couple of days, certainly has to do with geopolitical stuff. So we'll see how that holds up or doesn't. But, Barry, I wouldn't even be interested if not for the Rebel method. Well, again, this is one way that this is cool. Thank you. I appreciate that. I appreciate that comment, Barry, but this is your own wrinkle on the method, right? And this is why I talk about the low-hanging fruit, because it's everywhere. It's not just the stocks that I pay attention to. You can find it in a lot of different ways, to apply the method and keep that income coming in. This is why, even though I call myself an income investor, I don't and my method is a little bit more passive. I also consider what I do to be a very, very real way to build wealth, and this is a very real part of my wealth building long-term plan. Is because what we're seeing Barry do, even just with some of the more passive ways that I apply my method, you still get opportunities to take advantage of growth, and by placing more trades with less time, you're able to generate functional income while at the same time, in many ways, facilitating growth, and that's nice. So I appreciate that, Barry. But a lot of that is just you. recognizing the opportunity when it's there and being ready to take advantage of it. So, in the meantime, you got a nice weekend. Parties at Barry's. That's all I'm saying. All right. $45 strike call on PII expiring 6/20. All right. Let's take a list. Polaris. This company I really like, even though I haven't placed any trades on it in a while. I really like, I'm going to be honest, I really like this pattern. And I'm not just, oops, that's a really ugly line. Let me try to improve that. I'm not just talking about the downward trend here. This is a long downward trend that saw the stock fade all the way back from, around 84 all the way to a low to around 32, right? That's a great big long downward trend. I can't speak to the fundamentals, to be honest. This one has escaped my attention in the last little while. Maybe not now. Coming up on summer and recreational vehicles, right? There may be some cyclical advantages right now here. But what we're also seeing is a nice little rally off of that low to the stock's current price a little bit above 40. And our 20-day moving average has got a nice little upward slope. So we've got a nice little short-term upward trend. And it is approaching some resistance right up here in the $40 range. So we'll see if it can break that and keep that momentum going. Barry's trade was placed right here in March. It was assigned at, so I'm going to assume this early part here, right here, this peak, he was assigned at 45. Brought in $2.30 for that. So that's a nice level of income there. And again, if Polaris is a company you're willing to own, kind of like what Carl was talking about with with Schlumberger, right? And nothing wrong with this. That sitting through this decline all the way down to this low, that's a little bit stressful. Let's just face it. Let's call it what it is, right? But they sold a $45 strike price call that expires on the 20th. So your call is right about here at 45. So right at the same price that he sold. That means that if it does rally, there might be a decision of whether or not to let yourself be called out at the same price. Then again, $3 in income on a $45 strike price for a few months. That's not terrible, right? And as you pointed out, you're in position to take advantage of and receive this dividend. 67 cents. So all things being equal, that's another nice variation, another application of maybe a little bit more. This is a little more patient approach, right, than what you're doing with NVDL, just a different iteration. But if this is a stock that fits into this idea of legacy holdings, that you're willing to use Rebel Income as a way to build a portfolio and add to growth that way, there's nothing wrong with it. And yes, it does absolutely take all kinds of trades. This is one of the reasons that I like puts. Like I like being the seller of options as opposed to the buyer. Is it gives me more ways to think about what I want to do with these stocks, especially since these are stocks that I like anyway. There's lots of different things that I can do to put the stock's current price momentum and have it work in my favor. And so I feel like it gives me more, it expands my opportunities, doesn't decrease them. So, all right. Barry, these are some great examples. Thank you for sharing these. I really appreciate it. I appreciate everybody's participation today. Thank you so much. As I mentioned at the beginning, if you're on Discord, watch for that email this weekend with the invitation to Substack. Let me know how it goes. Please feel free to give me feedback as you're going through that transition. If you have questions, let me know. Want to make sure that I'm being responsive to this. I do believe it's going to be an improvement for everybody, but let me know how you feel about it as well. I hope, as always, you have a wonderful weekend. Thank you so much for your time. If you have any other questions between now and next Friday, don't hesitate to reach out. Thanks, everyone.